Last week, we predicted the critical breakout levels at 88,000 and the potential squeeze towards 92K and 96K. We emphasized the importance of securing profits and warned about possible pullbacks if supports failed. And exactly as forecasted, Bitcoin surged to 96K, squeezed shorts, and validated our roadmap step by step. If you don't want to miss these profitable moves and stay ahead of the markets, make sure to subscribe and turn on notifications. Let's dive into this week's key updates. Last week, we discussed the possibility of a squeeze above 88K. We advised taking partial profits around 88K, and if broken, watching the move towards 90K and beyond. Yesterday's daily close above 87.5K triggered an additional 4,000 squeeze. Congratulations to everyone who managed this move carefully. Fractal structures from previous cycles suggested Bitcoin could face resistance near 90K. Now we have reached that level. If Bitcoin struggles here, we should watch the 82K and 78K zones for potential support. Remember, fractals are guidelines, not guarantees. Bitcoin reached 94.6K and pulled back to 90K, which is a healthy correction. As long as 90K holds, another leg towards 96K remains possible. Dropping below 90K could shift focus towards 88 to 89K support areas. Bitcoin is holding above 94.5K resistance. Taking partial profits around this level is wise. We have already seen a strong plus to OK move from 7 for K without major setbacks. Managing risk and locking gains remains essential. Bitcoin has now touched the long-awaited 96K target. We are observing calm price action typical for weekends. Gaps left near CME 96.2000 could act as magnets in upcoming sessions. The broader roadmap remains towards 120,000, but expect volatility. Global liquidity indicators are flashing green. Rising liquidity historically supports Bitcoin bull cycles. However, political risks like Trump's policies, China tensions, and Fed decisions could prolong uncertainty. Stay informed and flexible. DXY sharp decline historically aligns with Bitcoin rallies. Similar to the COVID era, we see liquidity injections preparing the market for recovery. Bitcoin benefits from a weaker dollar environment. The 3-month momentum indicators are starting to turn upwards. Early recovery signals suggest Bitcoin could gradually regain strength. Momentum and price often catch up after a lag period. Stablecoin supply has surged while Bitcoin lagged behind. Recently, Bitcoin started aligning with stablecoin expansion. This stablecoin accumulation could fuel further bullish momentum after minor corrections. In our previous video, we predicted that Bitcoin could climb from 76K to 85,000, and it happened. Today, we'll dive into what's next, which levels matter most, and whether Bitcoin's journey toward 120K is still realistic. With charts, news, and both technical and fundamental analysis, we're building a complete roadmap for you. Let's dive in. Recently, Bitcoin performed a highly critical test on the daily chart, touching the 7 for K support level. This level didn't just hold, it bounced, signaling a potential shift in short-term momentum and restoring some market confidence. Historically, this price zone has acted as a powerful support base. Even in 2021, strong reversals emerged from similar levels. Today, this region is also backed by the 365-day moving average, making it significant for both short-term and long-term investors. However, for this rebound to be meaningful, we must reclaim the daily trend line. The 81K level is now the immediate resistance to watch. If Bitcoin can break through this level, the next stops would likely be 83,000 and then 85K. Surpassing these levels may open the door to targets like 88,000 and even 90K in the coming weeks. We've now entered what I like to call the blue cloud region, a zone historically known for being extremely oversold. This zone, ranging from around 71K to 7 for K, previously served as a base during deep correction spikes, like in the summer of 2021 when Bitcoin dropped from 65K to the 30,000 range. Those drops were violent and fast, but this zone acted like a springboard. Once again, we've returned here, and the market's reaction will be crucial. If macro panic calms down, particularly between the US, China, and the Fed, this blue zone could provide the foundation for the next major leg up. As long as Bitcoin stays above 7OK and shows strength in this region, I remain optimistic that 9.3K and 1.2OK targets are still in play. But remember, this zone only holds as long as global uncertainty doesn't spiral out of control. Just hours after President Trump hinted at a possible 90-day delay in tariffs excluding China, Bitcoin suddenly surged to 81K. Simultaneously, the S&P 500 added over $5 trillion in value, almost instantly. What's even more astonishing is that the news wasn't even confirmed, it was based on speculation. This highlights how fragile and reactionary the global markets have become. Two simple words, extension and negotiation, were enough to trigger a massive shift in market sentiment. The crypto space, with a market cap of just 2 to 3 trillion, is still seen as a small player. Meanwhile, the traditional markets continue to move trillions based on whispers. If a confirmed agreement between the US, EU, and Japan emerges and China follows, this fear-driven sell-off could reverse quickly. It's a reminder that in crypto, macro headlines still set the tone, and today, the tone was risked back on. As the global financial crisis deepens, Bitcoin continues to test its resilience. The key question now, can it stay above 7OK? Historically, this price range marks a normal correction zone in a bull cycle. Around 30% pullbacks are not unusual for Bitcoin, especially after strong rallies. But what's different this time is the macro backdrop. Central banks are tightening, global equity indices have lost 20 to 30%, and some stocks are down more than 50%. Bitcoin was designed to shine in chaotic, multipolar environments like this. But for that to happen, we need a pause in global selling. Holding 7OK is not just about technicals, it's about sentiment, stability, and the hope that cooler policy heads will prevail. If it holds, the case for 1.2OK plus becomes even stronger. Bitcoin has entered a crucial phase, facing several resistance levels back to back. The first is at 81,000, a level where Bitcoin has struggled to hold in previous weeks. If we clear that, 83K becomes the next battleground. This area has shown to be a major pivot point with several past rejections. But the true test lies at 85K. Not only is it a psychological barrier, but it also marks the beginning of a potential breakout zone. Clearing 85K decisively would mean reclaiming the daily trend. Above this, we could see a squeeze into 88K, where a CME gap exists, followed by a possible push to 92.96K. But let's not get ahead of ourselves first. We need volume, momentum, and clean closes above resistance. This week could be the decider. For nearly a week, Bitcoin has been stuck in a tight range hovering between 83K and 85K. Price action has flattened, volatility has dropped, and the market feels paused. But make no mistake, this kind of low activity often precedes explosive moves. Think of it as a coiled spring. The longer we stay flat, the more powerful the breakout tends to be. It's worth noting that such quiet periods often appear right before high-impact news or major macro events. This week, with the US market coming back from a holiday and fresh economic data expected, we could be on the edge of a sharp move up or down. If Bitcoin holds above trend and macro headlines soften, we may just be gearing up for another leg toward 8K and beyond. Ethereum's journey from $1,800 to $4,000 was impressive, especially between October 2023 and March 2024. During that rally, we saw minimal hesitation and strong momentum. I managed to take profits across for key points. Even after a brief dip to the $2,000 range in late 2024, Ether recovered above $4,000 again, creating 5 more opportunities for profit taking. In total, I took profits 9 times, but I expected a more sustainable run, potentially to 6K, 7K, or even 1OK in a strong bull cycle. Unfortunately, recent macroeconomic chaos, especially tariffs and liquidity tightening, has weighed heavily on Ethereum. Unlike Bitcoin, ETH hasn't shown the same resilience during this volatility. However, forward-looking liquidity metrics and ISM data still remain positive. If global tensions ease and liquidity returns, Ethereum could stage a meaningful comeback. I'm watching the $1,500 level very closely. If we close weekly candles below that, it would be a major warning sign. Until then, I remain cautiously optimistic and yes, I'm hedged just in case. So can Bitcoin really reach 120K in this cycle? Technically, yes, but for that to happen, several conditions need to align. First, global macro uncertainty must ease. That means progress in US-China trade relations, stabilization in equities like SPX, and a softer stance from central banks. Next, Bitcoin must maintain support above 70K. This level is backed by multiple metrics: realized price, 365-day moving average, and historical demand zones. A decisive reclaim of 8K would signal the beginning of a new leg up, potentially toward 96K, and eventually 120K. And don't forget the role of short squeezes. The more fear and doubt we've seen recently, the stronger the relief rallies tend to be. I remain long-term bullish. I continue adding small amounts to my HODL wallet and trading short-term volatility with caution. The path to 120K is not linear, but it's still on the table. Thanks for watching, and I hope this deep dive analysis gave you clarity on the road ahead for Bitcoin and Ethereum. If you found value here, don't forget to like the video and subscribe to the channel. I post weekly macro and on-chain updates plus educational shorts to help you navigate this crazy market. Drop your thoughts in the comments. What do you think? Are we heading to 120K? Or is more turbulence coming first? Until next time, stay sharp, stay curious, and stay in the game.